Hi and welcome back. In today's video, we're going to be covering the basics around credit unions. So let's get started. What are credit unions? Credit unions are non-for-profit organizations that exist to help their members with financial services. Their members also happen to be owners, so they are member-owned organizations and they again exist in order to serve the financial needs of said members. Are credit unions banks? Yeah, they are a financial institution that offers many of the same services that a retail bank does, except it is only for its members. Credit unions are also known to be more competitive than retail banks, meaning that their interest rate on loans tend to be lower and the interest rate on savings products like CDs or savings accounts tend to be higher. Are credit unions overseen by the same regulatory bodies as regular banks? No, they're actually overseen by different regulatory bodies, and it also depends on if they are federally chartered or state chartered. So let's talk about it. For federal credit unions, they are overseen by the NCUA. The NCUA stands for the National Credit Union Administration. It's an independent federal agency that oversees all federal chartered credit unions. It handles the regulations, it ensures that the credit unions are financially responsible, as well as it provides insurance. Similar to FDIC insurance, the NCUSIF, or the National Credit Union Share Insurance Fund, covers credit union members in case the credit union lapses, in which case they are covered for up to $250,000 per credit union. For state chartered credit unions, they're actually different state regulatory bodies. Each state has their own, in which they ensure that the credit union adheres to state laws, and most actually are also covered by the NCUSIF fund, meaning that most state chartered credit unions also have that insurance, but there are some that aren't covered. So you want to make sure that when you are looking at a credit union that you see the little logo showing that you are in fact insured up to $250,000. How are credit unions different than banks? Well, one is membership, meaning that there is a set criteria usually related to a field or a location. So there's credit unions for people who are plumbers, there's a credit union for people who are teachers, etc. And then location based could be the state of New York, the state of Florida, etc. Essentially, anybody who meets the criteria for becoming a member is eligible then to become a member at that credit union. Member ownership. So unlike banks, when you are a member at a credit union, you are also an owner towards that credit union, which gives you the perks of being able to vote, as well as the fact that in general, customer service to an owner is more responsive than customer service to a plain old customer. Not-for-profit status. So a credit union is a not-for-profit organization, meaning that instead of profits going to shareholders, it is instead usually reinvested back into the services and products of the credit union. But it also can mean that profits are then returned to the local community via sponsorships to local events, etc. Customer service. Credit unions are known for improved customer service because, again, members are also owners. Not only that, but credit unions are also known to be more flexible and working with a member in order to get the financial services that they need. Shared branching and ATM networks. So similar to retail banks, they are part of ATM networks, allowing you to use your debit card at different ATMs for free instead of paying an additional service fee, but they also are part of what is called shared branching. Now, shared branching means that credit unions are pooled together and allow for one credit union member to go to a different but shared credit union branch and still use their account and get information like doing transactions, etc., but just not at their particular credit union's branch. So it's kind of like these credit unions are partnered together so that way they don't need to have as many brick and mortar locations, but instead pool these brick and mortar locations together in a sense. Community focus. Credit unions, especially those that are more location specific, tend to invest their money more towards towards local community projects. So local development projects, there could be local events, little leagues, other types of sponsorships for things that are beneficial. They also tend to have grants towards recent college graduates. Credit unions also uplift their members by having extra learning opportunities towards financial literacy geared both at their members and also the children of their members. What are some pros to banking at a credit union? Well, the first pro is that you are not only a member, but you are also an owner. So that member owner status is considered a pro because you now have the vote in order to make changes to policies that you wouldn't normally have at a retail bank. Customer focused approach. So credit unions are again more known for being more customer friendly, and they really do try to create a strong relationship with its members. Competitive interest rates. As I've mentioned multiple times, a credit union tends to be more competitive on loan products as well as saving products than your average retail bank. Community involvement. So credit unions are more likely than retail banks to invest within their local community, and that is a perk often for a lot of members. Democratic governance. So credit unions again have member owners, and so each member owner is generally allowed one vote, and that's usually regardless of how much money you have at that particular credit union. But having a vote allows the average member to then vote on policies as well as where they are going to reinvest their money. What are some cons to banking with a credit union? Well, it could have limited branches or limited ATM service, which in the case of members who are no longer local to their credit union could be something that affects how they utilize the bank. Membership restrictions. So each credit union has membership eligibility criteria, and so you may not be able to meet the eligibility criteria for a particular credit union, and therefore you will not be able to become a member. Limited service offerings. While credit unions offer a wide variety of financial services, because they tend to be smaller in scale, they may not offer certain loan products or investment products that a larger retail bank would have access to or the capability to run. Technology. Credit unions may have limited resources in investing in technological advancements of their apps, of their website, etc. So they may not offer all the bells and whistles, and it may not be as pretty or as polished. So yeah, that pretty much sums the basics of a credit union. I hope you found this video helpful. If you have any questions at all, or if you just want to say hi, please leave a comment below and I will be happy to answer and reply. Please give this video a thumbs up. If you are subscribed, thank you very much. And if you're not, please consider subscribing. And also, if you would, please share this video with another person who might not know the difference between a credit union and a retail bank. So, as always, I hope you have a great one. Bye.